So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Catani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcatani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Catani, and I'm joined today by Sam Hales, private equity real estate fund manager with 65 million plus in assets under management and founder of the Saratoga Group. Sam has 15 years of real estate and management experience in distressed asset workouts, land development, redevelopment, and lease options. Aside from being the lead investor and developer in the entitlement and development of large tracts of land since 2009, he has been actively purchasing single-family properties in the Sacramento and Bay Area markets. He has developed and purchased office buildings, industrial buildings, and multifamily buildings, and is developing a boutique hotel. Since 2017, the focus at Saratoga Group has been the purchase, revitalization, and operation of mobile home parks. Sam, welcome to the show.
Jonathan, thank you. I realize as you read through that, I probably should have updated a couple of things before I send it over. So just for the record, 200 million in assets under management at this point. Yes, that number's changed a bit. That's because of just we bought a ton of mobile home parks. So we have 87 now. So basically our mobile home park business dwarfs whatever we did in the past with single family and some of that other stuff we did some things with. But yeah,
wow, that's awesome. Congratulations.
Yeah, at this point.
And that's no small feat in mobile home parks. As those of you who are familiar with the asset class, as well as those who are new, they're typically not as large of an acquisition as like apartments, multifamily would be. So to put that into perspective, that's a lot of, what did you say,
87
different locations.
Yeah.
Wow, congratulations. Well, let's kind of jump into it. Take us back to the beginning then. Obviously, you weren't always in mobile home parks in that asset class. So take us all the way back, where you started and what led you to where you're at now.
Yeah. So really went full-time into real estate about 11 years ago, formed Saratoga Group. As you mentioned in the bio, did a lot of single family home investing kind of after the crash when prices were down and it's like, didn't know where prices would go, but definitely knew that fundamentally the rents you could get based on your acquisition price, like those numbers made sense. So we bought a bunch of single family homes a number of years ago. And then as the environment and the economy changed and prices started bouncing back, we've been opportunistic before, and now it was like, okay, what is something we can invest in that'll do well in different economic cycles, and something we can build a team around, build a business around. And that led us to mobile home parks. And so we started buying mobile home parks in 2017. And as we discussed, now we're 87 parks later, we built ourselves a pretty nice portfolio.
Wow, that's incredible. And even, back then, cap rates had to have been what, in the 10s for mobile home parks, double digits probably.
Yeah, I kind of, right. We kind of got in right as things were starting to change a little bit, but they didn't move that much. So yeah, a lot of kind of high 8s and 9s and even a couple 10s. But of course now that just seems absurd, right?
Absolutely.
Yeah.
So what was it about it back then? Was it the cap rates and kind of not as many people in that asset class, or what did you guys recognize that kind of led you all the way back then?
Yeah, I was fortunate. I had both a friend and a banker that kind of enlightened me a little bit on the space. A banker being, hey, we banked with 5 Star. They were doing a bunch of other real estate loans for us, and said, hey, we really like mobile home parks. Why don't you go buy some of those? Which is kind of an interesting thing to get from your banker, but I'll always appreciate that. And then a friend of mine and his friend was doing it, and so I just it sounded interesting. I didn't know much about it. And then the way I work, it's like I hear about something new, and if I think it has merit, like I just dive in and start learning as much as I can in podcasts and books and everything else. And 100 hours of listening later, I was like, yeah, I think this is it. This is what we want to do. So.
Wow, that's awesome. That's incredible that, you had that kind of intro to it, especially from the lending side where they're like, hey, we'll lend to you if you go do these deals. It's like, all right, well,
Yeah,
that's one of the hardest parts right there. So
that's right.
nice to have that. So kind of give us, like we mentioned, definitely some more capital, even institutional money jumping into this asset class. But for those who don't really understand it, kind of give us a high level of, what the acquisition looks like, what you're acquiring, and kind of the structure and how the business operates.
Yeah, you bet. And I'm glad you referred to that as a business, because it really is. It's more, mobile home park investing is more like running a business than it is like just investing in real estate. So let me explain that a little bit. I like to call it a land lease community. The reason that I like that is that it tells about the economic structure, and it also gives flexibility on the type of homes that are on there. So we call them mobile homes right now, but sometimes they're called manufactured homes, and then people call them trailers as well. But none of those are necessarily the house that has to be put on the land. What you're buying is you're buying land, you have it developed where there's individual lots, and those lots have water service, sewer service, electrical, maybe gas in some cases, and you bring a home in and you hook it up. And the idea is you're leasing out that land lease, and then somebody else owns a home that sits on top of the land. I think there's some super interesting things that are happening around tiny homes and 3D construction and that sort of thing that could have some cost efficient alternatives here in the near future. There's also some things that are happening at a federal level that may make it a lot easier to finance these homes, and which would really be a game changer for our industry. But anyway, that's kind of the arrangement, where ideally you just own the land, you're leasing out the land, and people are have their own home that they bought or are buying sitting on top of your land. Now, that's the ideal. A lot of times you end up owning a bunch of these homes, especially mom and pop owners. They typically like to own the homes, and so we'll buy those communities, and then we'll go through the process of selling off the homes to the residents, or if people that are there aren't interested in being homeowners, we'll non-renew their leases, and then we'll sell the home to somebody else that comes into the community. So that's how it works. The reason I say it's more like a business is it's really, at least initially, very hands-on. Like you've got to be stern about the rules. You've got to set up processes. You got to make sure that, like, we use a system called Pay Lease, where people are paying their rent by going into Walmart. They have an account number, they can hand cash or whatever, and it goes directly into our bank account, kind of hooked in. They can go to Walmart anywhere in the country and do that. And so setting up all those processes, I mean, it's a super important part of the business. Once you get all that going and the processes in place, then it is pretty easy, and it's more like just collecting checks in real estate, but it takes a while to get there.
Absolutely. I appreciate that explanation. That makes perfect sense. So you mentioned very difficult in the beginning, at least, typically getting all those systems in place. Are you typically dealing with residents who just never had anything like that, and so you're getting them to kind of adopt it? What seems to be kind of the things that take the longest to get all that in place?
Well, so you mentioned, and I should probably back up a little bit, but you mentioned there's a lot of institutional capital interested in the space and getting into the space. They're not going to buy what we're buying. And I mean, we buy nice communities or 250, 300 sites. Not always. We buy a lot of smaller ones as well. And they would love to own those. But typically what we're buying is maybe 60% occupied. So there's a lot of vacancy. There's probably deferred maintenance that needs to be taken care of. Maybe the roads were never paved. I mean, just things like money that needs to be put into the community to make it nicer, make it attractive, and make it to be a place where kind of people we want to live in our community want to move in. So that's the anyway. I mean, that's kind of the big difference between what we're investing in initially and kind of what some of the institutional capital is looking for in the market.
Got it. Okay. I know one thing I've heard from some mobile home, some lease land operators is kind of this NIMBYism thing is really hitting this asset class pretty hard, right? For those who don't know, this just basically stands for not in my backyard, which essentially people just not wanting these type of communities near where they live for whatever reason, right? Bit of a misconception around the demographic of people that live in these. They're really not that, it's really not that bad of a demographic as people may think. So you mentioned this sort of like tiny home and even 3D printed home. Do you think that communities and cities and will maybe be more open with the possibility of tiny homes and 3D printed home as opposed to a mobile home being on the land?
It's a super interesting question. Yeah, the problem that the local city council person has is exactly what you're talking about, which is the demographic. Like, no, we don't want more of those people living in affordable housing, living in our community or living in that location down the street from me or whatever their deal is. But you're right. Like if you had the same economic structure, it's a land lease community, and you brought in these kind of retro, cool looking tiny homes or 3D printed homes that everybody gets all excited about, then it's like the story suddenly changes, right? Which isn't really fair to me, because I mean, isn't that what we're all talking about all the time? We need affordable housing, and then, but it's like, yeah, everybody wants it, just not in their neighborhood. So, well, it's got to be in somebody's neighborhood. But I think that's I think there's an opportunity to kind of lead with, and we're doing a little bit of that. So like we have a couple RV parks, one that we recently acquired, another one that we're working on, where the idea is to bring in some of these park model or tiny homes. And you're right, like you show these photos and the city council's like, oh, that's great, that's exactly what we want. If we show this other photo of the mobile home, they're like, no, we don't want. It's like, well, it's not that different really, but it's perception.
Fascinating. Okay. And so what other things are, you working on in some of these markets in order to, because you can only acquire so many, right? So what are there some workarounds, like you mentioned the RV park and different things that you can do to, maybe build more or have more opportunity in this asset class?
Well, and I think probably when you were talking to some other operators or in some ways, I think we all look at that and say, well, that's kind of cool because it's like a moat around whatever's existing, right? But if we really step back, I mean, that there's so much demand for affordable housing. It doesn't need a moat around it. We need politicians and other people to like enable this sort of development to happen. I can think of a couple examples where people have pushed through and gotten approvals for full-on mobile home park development. And in fact, we just got approved for an expansion outside of Austin, Texas. So it's currently about 90 units. It's going to be 240 when we're done. And that seems to be another way that you can do it. Like if there's an existing community and part of that same parcel is vacant land, or maybe you have a parcel next door, that seems to be a lot easier to do. Like the big guys, ELS and Sun Communities, like if you read their investor reports, they're doing that all the time. They have those projects going on. So that's a lot easier to make happen, because it's like, well, the community's already there. So you don't have the same NIMBY problem that you do otherwise. So I think that's probably the biggest way. But all that being said, my understanding is every year there are less mobile home sites in communities than the year before. There's more of them getting redeveloped into Walmart and Costco and the rest versus actually coming out of the ground and getting built.
Wow, that's fascinating. So you mentioned something that I really like, and that's that you kind of tailored this toward more of the affordable housing, which we are very much struggling with. I read an article the other day in Wall Street Journal about how developers can't keep up with, the demand for Class A. And it's like, sure, yes, there is a huge demand for that, but they don't seem to be rolling things out, or they keep talking like they're going to roll things out for affordable housing. But in the next breath, they talk about how they don't really want it. So what are some things that you're seeing, or that you guys are paying attention to, kind of macro wise, in terms of, maybe having to move markets or different things like that?
So let me just make sure I understand the question. You're saying, like, what are we looking at in terms of macro trends relative to the mobile home park industry?
Right.
Yeah. Obviously there's a lot of uncertainty with regards to, and I'd call it headwinds with regards to what's happened with interest rates. And I think it's probably overdue in terms of what the Fed's trying to accomplish. But that automatically means that it costs more to finance that next acquisition, or if you're going to go refi one of your communities, that's going to be a little bit more, whatever. All that being said, there's way more tailwinds for our industry just in terms of overall affordability. So to give you an example, 2 years ago, the mobile home that we would, because we often buy the homes, bring them into the community, and then sell them to new prospects or residents. And the home that we would buy 2 years ago would maybe cost on average $32,000. That exact same home today, I mean, no improvements, not $48,000. So the house went up by 50%. It went up by 50%, but it also went up by $16,000. So 50% is a big number. And that kind of rivals what we see in the traditional kind of stick-built housing market and how much those prices have gone up. But what is a median home price in the United States now? It's like 370 something. I mean, it's some astronomical number, right? So if it was 250 before or whatever, and now, I mean, 50% there's 120 something. I mean, we're like 10% in terms of that increase. What is it? So how do we handle that? Like, how do we still make it affordable? Well, they used to be able to buy the home on a 10-year term, and now it's 12, or maybe it was 12 and now it's 15. We're same amount of money down, same payment. It's just going to take them a little bit longer to pay for it. And so I really look at it, I feel like, man, we're still in a really good space. And in fact, because of what's happened with other pricing, even though our prices have also gone up, the delta between what we can charge and what others are charging has widened even more, just making what we have to offer that much more attractive.
Awesome. I love that. And that is fascinating. That has gone up 50%. Meanwhile, like you mentioned, all of their homes are, on a much smaller percentage. So let's take this now to the investor level, right? As we mentioned, investors starting to really see the appeal of this asset class, not as much going into sort of, I think, selling them, so to speak, on this asset class. But what are some things to consider for maybe some investors who are wanting to move into this asset class to look for in terms of, vetting an operator and different things to look at before, deciding to invest?
Yeah, so I mean, be a couple of different ways they could do it, right? They could go buy a mobile home park and operate it themselves, and I would just suggest doing as much research as you can and educating yourself. I don't have any tie to Frank Rolfe and the mobile home kind of seminars that they do. I think it's like a 3-day course, but I've read the materials and it's chock full of great information. That'd probably be something to do. In terms of operators, because it's really more of a business that you're operating in. It's probably way more important, like who versus what versus the real estate. It might be, one way you could do is you could invest in a REIT that's publicly traded like ELS or Sun, and of course you're getting a lot of efficiency out of that sort of a transaction or that sort of an investment. Maybe not the same opportunity, but that might be a way for somebody to get their feet wet and kind of understand what the market's about. But beyond that, it's really the operator has got to be willing to like roll up their sleeves, get dirty, really kind of solve problems. From our perspective, the things that make sense to buy in our space right now are still these value add projects. And yes, those prices have gone up, but the way I look at it, if we're trading or we're buying on a cap rate, but it's the rents are 250 and they should be 400 and it's only 60% occupied and the expenses are all over the map, like, does that NOI really represent the opportunity? Like, not really. Like, if it went from a 10 cap to 7 cap, like in terms of real dollars, it doesn't change that much. Like, where you get to move the needle is you bring rents to market, as you make it a nicer community and you bring in new homes and you change your occupancy and all that sort of stuff. But all that is way easier to talk about than it is to do. So it really, from my perspective, it's about the operator.
Love that. Yeah, that's really, really great perspective. And as you guys continue to build your investor base, what are some of the things that you're using to educate in terms of helping investors understand this asset class and of course you guys as well?
Good question. So we've unfortunately, it's not a super mature, I don't want to say unfortunately, it is not a super mature industry. So if I was doing multifamily apartments and I wanted a new, you could think of your whole software stack and you just wanted a new piece of software for this or that. There's so many alternatives and options, but there hasn't been very much software created for the mobile home park industry. And like we're using Rent Manager and that does a property management and kind of back office accounting, and it does fine. But kind of extending beyond that, we've had to create our own software, and so that's been more challenging than we'd anticipated and expected. But it's really helped us to, I think, move the needle quicker, and we really take on a lot of these value add projects, more than anybody I know. And so we need, these really functional and dynamic, robust KPIs that are informing us what's going on, but we can then share that with our investors and like, okay, here's how we're tracking how long it takes from a home coming in to getting set up to being able to sell it. Here's our trends in collections. Here's our, a whole bunch of different things that we're kind of looking at that primarily are giving us visibility, but we can then share that with our investors as well.
Okay. Wow. That's fascinating, having to develop your own software, which brings on a whole new, then you have to bring in software developers and, they have to understand what it is you're trying to accomplish. So, have you kind of built a team of those as you've needed to develop software, or you just kind of hire it as you need it?
We have a little bit of secret sauce there.
Okay, fair enough. Fair enough.
No. Well, no. Actually, I'm going to give a shout out to my son, who's actually going to school there near you, studying computer science, and basically, he probably spends 20 hours a week working for us, and is just kind of a whiz with this stuff. So we're just all the time adding more features and whatever, and he's able to do it himself. So.
Sweet. Love that. Shout out to BYU. Probably the only time I'll give a shout out to BYU. So relish in that, BYU fans. I went to the U for a little bit. So
okay.
But my dad and brother both went to BYU. So
got it.
Yes. House divided. But that's okay. Yes. That's okay. We love it. Awesome. Well, as we kind of wind down here, you mentioned you guys are really as far as taking on, these really, really big value adds. So is there do you just look for very distressed? Is that kind of the most important thing to you guys, or what seems to be the most important thing that helps you determine whether or not you're going to make an acquisition?
Oh yeah. I mean, to be honest, I would much rather buy something that isn't a value add if the numbers make sense, right? I mean, it's just way easier and a lot less work and faster to get your return start, but so I mean, and over the last year and a half, we've actually been pretty successful in, especially in a couple of key markets, picking up some opportunities where there's a lot of occupancy already, and it's just kind of adding a little bit of improvement and then moving rents to market. But I mean, I'll give you an example. One we just closed a few weeks ago. Let's see, 150 spaces in Florence, Alabama, which is just west of Huntsville. And it was about half occupied, but it had a whole bunch of new homes. Like there were 43 homes that were within the last year.
Wow.
But a lot of those were vacant, or, unfortunately the seller really had no idea who was renting. And so, I mean, they collect maybe 25% of their rent roll. It was crazy. So anyway, we ended up buying this community at a value on the homes of over $3 million. We paid 2.9 million for the community. And I mean, literally, if we just said, hey, we're having a sale and we're selling all these homes, like we could have netted over $3 million for the homes.
Wow.
And so, but it's just but it's like, well, what was a cap rate? Well, cap rate was nothing. Like they weren't making any money
Right.
because they weren't collecting rent and they weren't enforcing rules, and it was like the Wild West out there. And so those don't come along all that often, and they're a ton of work when they do, but they're obviously extremely rewarding if you can dig in, roll up your sleeves, and figure them out.
Yeah, that's almost like a brand new deal, right? Like just like almost like you guys developed it and it just is now getting to its lease up period.
That's right.
So how do you even underwrite for what does that even look like? Do you just kind of have to make stuff up, or I mean, not necessarily make stuff up, but you know what I mean? Like kind of just fill stuff in.
Well, to give you an idea, we couldn't get any bank financing, right? Because they're like, well, what's the trailing 12? It's like, there isn't one. Like, what do you mean? I mean, we tried to get a bank loan. So we had to pay cash for it. I mean, it's just, it's kind of tough at the beginning. We actually started managing it for 2 months because once we met the seller, they're like, look, we have a lot more confidence that you can get this figured out. We're not able to do it. So which gave us a little bit of a head start on figuring out like who are the bad actors and how do we do this. But I mean, we're still, like it's turning already. So here we are 3 months in, it's turning. But I'd say, in another 2 or 3 months, we can go get a loan on the property. And it's not going to be what it could be, but it's at least going to show, hey, there's positive growth here. But as far as the underwriting, typically what we underwrite if we're doing a project like that is initially, we call it the J curve, but initially profitability and occupancy are going to go down before they go up. Because in order to attract who we want to bring into a community like that, we first have to get rid of the people that we don't want there, that are, almost terrorizing sometimes other residents, or they think they're martial law. I mean, again, these are kind of extreme examples, but these are the sort of things that occasionally we take on. We've had to get the FBI involved before. I mean, just different things where
Wow.
there's stuff going on. You just have to like tackle it and take it head on. And once you do, I mean, it can turn out really well, but it's a lot of work in there.
Wow. That's incredible. Yeah, I guess that makes perfect sense then, but that's one of those things, right? Where you take that on, you obviously are transparent with your investors. They understand what's happening. But then, when it comes time, the investors in this deal now, as it, assuming it all goes well and it's in that way, that's word of mouth. They're like, hey, you guys got to hear about these operators that we're partnering with that, can literally take on anything and get it stabilized. And, that's really, really awesome to see that. So congratulations and good luck moving forward.
Yeah,
That's a massive lift for sure.
Yeah, it is.
Awesome. Well, as we wind down here, we'll get to the final five. Got 5 questions that I ask all of my guests. First question, best advice you've gotten from a mentor?
Well, I'd say best advice specific to this industry was to stay out of the headlines. And I didn't know what Steve meant when he said that initially, but basically when you're in affordable housing, you kind of want to be the quiet guy in the background that's just making things happen. Because usually if you're in the headlines, it's because you weren't doing the right things or you weren't treating residents right and that sort of thing. So just like thinking about, hey, what I do, is it just a win for my investors, or am I also winning for these residents? If I'm winning for them, then now we have something where everybody benefits, and that's what we want to do. So
Awesome. I love that.
Took that to heart for sure.
That's a really, really great perspective for sure. Because you do, on the other side of this in the end are, people, of course, and place to live and all of that as well. So awesome. What is it about your career that makes you feel like you're fulfilling your why?
Yeah, I really, well, okay, you gotta indulge me just a minute. So it's, in addition to the affordable housing, I grew up in Iowa, took the school bus to school. Like most people I know that are my age, it seems like not as many kids are taking the school bus anymore. But I can tell you that most kids in our communities take the school bus because mom and dad can't afford to be, driving them around and getting to their job and whatever else, they need to do. And a lot of times it's a single mom. Anyway, my experience with the school bus was not always pleasant. I can remember getting on the school bus as a middle schooler. I'm just entering the 6th grade and there's these big burly 8th graders sitting in the back of the bus. I'm like, just put my head down. Like, I don't want to get hit. I don't want to get made fun of, right? I'm just like minding my own business. And it's intimidating as a kid. And so if you were wearing the wrong clothes or you got off at the wrong stop and you lived in the wrong neighborhood, like you get made fun of because of that. And so we call it the bus test at Saratoga Group. How do those kids feel when they get off in front of our community? Are they embarrassed because of where they live, or are they happy to be there? Do they feel like, are they proud to live in that community? Obviously it's still affordable housing, but if it looks like a train wreck, like we're not doing our job and we didn't pass the bus test. And that's really important to us. So something we talk about.
Wow. I love that. That's incredible. Very deep. I remember the school bus very, very well. Yeah.
Yes.
I don't know that I've seen a full one anymore, even driving around my neighborhoods. I think they're always just kind of, like you said, not as many people taking them anymore.
Yeah.
Favorite non-real estate or investment related book?
Man, I should have prepped for these. Favorite non-real estate? You
Yeah.
said? Yeah. It's and this again, indulge me just a second, but I had a business trip to Omaha, Nebraska last week. And I'm in Omaha. I'm like, I got to go by Warren Buffett's house. So took a photo in front of his house and then got yelled at by the security, whoever's behind the security camera, to get out of his driveway. But anyway, I have a ton of respect for Warren Buffett, and I don't care that I got yelled at while I was there. Like, just so that book, Snowball or Snowball Effect or something like that. Anyway, about his experience and what he built is amazing to me. And I have adopted some of the things that he talks about there in terms of, like, it's not all about diversifying your portfolio. Like, if you know something really well, like, you should be over invested into that area. So for me, I feel like, mobile home parks, like, if we figure this out and we know this really well, I'm way overweighted in mobile home parks, but I'm okay with that.
I love that. That's awesome. If you could have any superpower, what would it be?
Oh man. Yeah, that's a good one. So yeah, I don't want to get too deep, but I mean, probably something just related to kids and yeah, you just think of some of the tragedies that have happened recently. And one of the things that we do is any community that can fit it and it merits it, like we'll put a kids playground in there. And so yeah, I don't know if that's superpower, but yeah, just helping the kids.
Absolutely. I love that so much. Yeah, it's so important. Seems to be something that, uh, not as heavy of a focus anymore. I don't know why. It seems like taking away music programs and just all the things
Yeah,
that kind of,
yeah,
maybe not necessarily were like, actually, you know what? I'm not going to say they weren't crucial because they probably were and are,
right.
like I definitely took that stuff for granted, looking back. But yeah, I love that. Awesome. Last one. What's the best way for people to get a hold of you and learn more?
Go. Finally got an easy one. Yeah, I pretty active on LinkedIn. So just Sam Hales Saratoga Group on LinkedIn, or feel free to email me, sam@saratogagroup.com.
Awesome. Sam, thank you so much for your time and all of your insight into the mobile home communities.
Yeah, Jonathan, thanks so much. Yeah, really enjoyed it.
Absolutely. Likewise. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.